This is your LMAX exchange technical update for Tuesday, January 3rd, 2017. Euro dollar. So the euro continues to consolidate after breaking down to a fresh multi-year low, and the pressure remains firmly on the downside, with the market positioning for a test down towards parity over the coming days. At this point, it would take a break back above 108.75 to take the immediate pressure off the downside. Sterling dollar. So cable has broken down in recent trade, and the market now is consolidating ahead of what could be the next downside extension. After breaking down below what had been some support in the 123 area, this put the focus back on the downside and a potential retest of that plus 30-year low that we saw back in October of 2016 down at 118.40. At this point, it would take a break back above the previous base at 127.96 to take the immediate pressure off the downside. Dollar yen. So dollar yen has been trading significantly higher over the past several weeks, and the market now is focused on a test of 120 over the coming days. At this point, recent highs at 118.67 have capped for now, but any setback should be limited in favor of additional upside through 118.67 and towards the challenge of that 120 barrier. Euro Swiss. Euro Swiss has been pressured to the downside, and the focus for this market is on a retest of the 2016 low that was seen back in June of 2016 at 106.24. At this point, we need to see a break back above 109 to take the pressure off the downside. Aussie dollar. So Aussie has come all the way down just shy of some critical medium-term support at 71.45, and a break of that level is seen in the sessions ahead, which could open the next downside towards the 68 area. At this point, if we do see any rallies, they should be well capped, with any rallies seen well capped, ideally ahead of 74. Dollar CAD. So dollar CAD has seen a bit of a pullback over the past few sessions, but ultimately here the structure is highly constructive, and a fresh higher low is sought out above 30.81 in favor of the next push beyond 35.99, the recent high, and towards the 140 area further up. Kiwi dollar. So the New Zealand dollar continues to be very well capped into rally since topping out in 2016 just shy of 75, and there is risk for deeper setbacks now towards next key medium-term support at 66.76. SPX 500. The S&P 500 is in the process of consolidating and correcting a bit off recent record highs just shy of 2300 in the 2280 area, but any setback should be very well supported, with only a break back below 2180 to take the immediate pressure off the top side. Gold. So gold has seen a nice little bounce out from its recent multi-day lows in the 1120 area, but the market will need to now establish back above 1165 to keep this correction going. Otherwise, we could see a lower top and retest of those recent 2016 lows in the 1120 area. At this point, though, ultimately, there is risk for the potential for a longer-term base if we do hold above 1120 in favor of a resumption of gains back eventually above the 2016 high at 1375. So with gold, we are at a bit of an inflection point right now. The market is in the process of correcting off that recent 2016 low. If the gains continue to extend, we could see ultimately this correction turn into a bullish resumption or a resumption of a broader basing outlook, which favors additional upside. If, however, the market stalls out and breaks below that recent low in the 1120 area, it could take us down to the next downside extension towards 1000.